Hi. Well, two of the three of us are back. Bags, along with my bullish running partner, GP. We're here. But Nick is a little under the weather. So, Nick, we hope you feel better. We'll proceed without you this time, my friend. But know you're missed, and can't wait to hear a better report on you feeling much better. So anyway, with that, GP, I teased it as I started the live stream moments ago. Another week of more bearish bags. There's the S&P 500. We're dangerously close to that 50 weekly EMA and that trend line coming down with looks like some rollover on the RSI, but futures just opened a little bit ago, so nothing set in stone. But we'll see how price action works out from here. GP, are you surprised I'm a little bearish?
No, it's two back-to-back days over the 200 EMA. We haven't seen that in the SPY in quite some time. I think August was the last time. Before that was March, April. So
those were great times in March and April.
Yeah.
So that was great.
We attempted the first time and then we rejected it. That was off the CPI number. And then all of last week, we kind of dragged up and closed above it on Wednesday. And then because it's a holiday week, they just can't let us close green anymore because they want everyone to be miserable.
Yeah.
They decided to make it red, but it still held the 200 EMA on the SPY. I'm more bearish the SPY than I am tech. I guess if that makes sense.
Go into that just a little bit further. Because when we look at the Dow's broken out by all intents and purposes, right? Like that's a much different. But what I'm saying, this is a much different looking chart, right? Than this or this. And we can even throw the Russell in there too than this, right? So it's obvious for the past couple months that the strength has been here, but why are you more bullish tech as opposed to the S&P?
So a couple things, right? So before I go there, the small caps, as weak as they've been recently, were one of the few ones that didn't actually make a lower low.
True, it did not. You're right.
Right. So it's this bifurcation of like relative strength at the same time being relative weakness, right? So as everything else has been doing well over the last few weeks, small caps have said, no, I don't feel like participating. But then when everything was dying a few months ago, small caps said, no, I'm not going to die either. So it's in this interesting place of I don't know exactly what to call it, but it's a wait and see mode for me. The Dow Jones does look better. It is the first time since we made a new high in January of 2022 and then immediately rejected it on January 4th or whatever that day was, January 5th, when it tried to make a new high on the Dow Jones. That one, that week. It tried to make a new high and immediately rejected it. And we've been relatively making lower highs since then. Yep. And so on Friday was the first day that we made a higher high and held it. So that's definitely a change in character. But we know in 2022, every time we've seen some of these kind of incremental highs, unless it's energy, then energy does what it wants. But everything else has been like incremental high and then reversed to the downside. So what I'll be watching here is for the Dow Jones. And look, man, we already gapped down on futures. Like record holiday sales, doesn't matter. Like China shutting down, that's just like in March when we were kind of trying to bust out. China shutting down smoked us to the downside. It didn't matter what any company was doing or what earnings were coming out. China was closing down. So China closes down, conversations of supply side inflation continue to fester in everyone's minds because they provide a lot of supply.
Yeah, there's nothing that I like about any of the China charts right now. As you mentioned that.
They're all a mess, right? Ultimately. And so the Dow Jones did make an incremental high, but until I see like a follow through week or two, that's actually pushing to the upside. Like if you're looking at the ones that are sitting in the Dow, like Goldman Sachs looks good, but it looks super extended. Right?
Yeah.
Look at that, right? Like, but that to me on a weekly, that's an inside week essentially, and then up, right? But not up. What you'll notice is that a lot of the moves this time around off the rounding bases haven't had that push up like they did in March or even in June. Right. So you had like the small rounding base and then it tried to push, but it was very nominal. It's been very nominal in terms of like another one, if you're looking at is Microsoft, right? Microsoft, I think they're part of the Dow. I think so. I don't remember. I can't remember everything, but it looks exactly like Goldman. It's a inside doji kind of candle and then pushed up, but not a great push up. Whereas like you look at it's the end of July, right? Or mid-July, you saw that doji candle right underneath the 20-week or the 9-week or whatever that was. And look at the candle that followed through on the next week, right? So it's good to see, but it's not the level of power that I would have wanted to see last week. And last week was a holiday week. There's still a general lack of liquidity. And then you add in the holiday week, it makes it even more. So pushing around stocks via flow is a lot easier to do. Yeah, so there's a lot of stuff that's in this kind of zone, and it just can't move out of the zone.
Yeah, no, right. and just to all those points, and coming back to bearish bags again, like this is an important spot for the Dow. As good as the Dow looks, right? Like this is a heavy volume zone. This is a hard resistance line. And it basically topped out where it did back in August, right? And it basically went above and was a false breakout here in March, right? So this is an important zone for the Dow. So when I say like the Dow looks better, like the Dow did look better, not that it currently looks better, from my perspective, but there's nothing really that shouts that I like the SPY or
go back to the Dow for a second though. Sure. That's a pretty like on the weekly basis there. You mentioned so it's back to the zone it was in July and August, but it broke through that zone, right? Like so it's definitely change in behavior on a week to week basis. So what you want to see is if that change of behavior has people returning to the bull side, right? Or is a change in behavior just a momentary lapse in judgment? So,
well, for
right. So like that exact candle, if you're looking at that same topping pattern, we had the same kind of doji candle on that week. And what was the resulting candle from the following week? It was straight down, right? It got wrecked. So on this kind of similar doji candle, it pushed right into that resistance. So you could be at a point where the resistance is too much and sellers come back in. That's a possibility. But the fact that it even got and closed right at resistance is a big shift in character.
So, well, what I'm talking about is support becomes resistance and resistance becomes support, right? And we had this whole area right here of this chop, and I'm going to turn the EMAs off of this, and you can go down to the wick low, but basically this area right here was up and down and up and down and up and down and up and down. And then you fell below, right here, you fell below finally. And then you're able to come out. And as we've talked about numerous times, it's a false breakout, right? Because that's what let us down even further, a new low. And then we come into August right here and we meet that line almost perfectly to fail again. And that's where we're at right now. So I hear what you're saying. It is a change of character, but we're basically where we've been two other times, three other times this year, twice to the upside and three times to the downside. So we'll see what happens. I think it's an important week again.
Agreed. It's the highest close since middle of March, right?
And I think if the Dow can push higher, you could probably see some moves, in the Qs or in tech or in the S&P. I think you can still find a little ways up if the Dow continues to do that. I mean, you've got another Dow component, Salesforce, that's reporting this week. You mentioned Microsoft earlier.
Yeah.
One of the
biggest. Even placed ExxonMobil, right?
Yeah, exactly. But CRM, right, is a tech stock, but it's in the Dow. And I mean, who knows what could happen here with CRM? It could be a catalyst for the rest of tech and the Dow at the same time. But we'll see. I think one thing that I've been paying attention to, obviously, as I always do, are my semiconductors. And to me, over at Charts for Charity, Big Greenie, he pointed out something about the semiconductors, which also would be a change of character. Basically, every time we've come up to these points where we've had, a flagging pattern, it would break down, or it would push up and then just straight break down. So 2 weeks right here, and then you break down. 2 weeks right here, and then you break down. We're in week 2 right now. And we haven't, I wouldn't say last week is a start to break down. It did finish higher.
What is that? That's Nick's favorite setup.
But yeah, that's a 3-week kite, right?
Yep.
It's a 3-week kite. So you don't have the RSI turning down. So I think, with the way semis have acted over the past month, if they could turn around here and keep going higher, then you might have a positive note from Salesforce, which continues the rest of tech, and Dow. We could have a nice little rally into the end of the year, but it's hard to put my finger on that when we're at resistance, right? One thing that we talk about is we'll just buy the breakout, right? We don't want to buy it before it breaks out, because we've seen it happen too many times where it turns around on you and dumps. So while I say I'm bearish bags, it's more of the essence of, if we go down for here, it would make a lot of sense. But this is not the spot where, you pound the table and say it's all in right here, because you could really put a lot of money to work. You could really get burnt on a setup like this.
Yeah. So I think the risk is still
not financial advice.
Yeah, definitely not finance. But you have the Qs and the semis all in a 3-week type pattern, right? You have it. So a 3-week type pattern, for people who may or may not know, is closing price on a weekly basis within 1% to 2% of each other, right? So on the SMH, this week it closed at 221.25. Last week was 219.52, and the week before that was 228. So that, in your CanSlim kind of methodology, is a 3-week tight ready for higher. And so we had a similar 3-week tight in the S&P in the middle of October, right? So that was 3 weeks tight, and then you saw the resulting candle afterwards. Granted, that candle was all on a Friday.
Yeah, it was.
So it didn't feel as pretty.
It didn't feel as great, right?
So
that one right there.
Yeah, exactly. So like even when the Bulls follow through, it just feels dirty. So I don't know what your individual stocks are going to do, but this is why I like the Qs over the SPY, is because the setup is a tighter setup on the Qs because it's 3 weeks tight.
Yeah.
And it's 3 weeks tight above the weekly 200 EMA, right? Which it broke for 1, 2, 3, 4, 5, 6, 7 weeks. So what I like about this is you're potentially in a false breakdown setup here into a 3 weeks tight pattern above a key weekly moving average that is held for 14, 15 years. Where we're at a point where if we do reverse lower from here and ultimately break down the setup, then you're probably looking closer to our
fuck it, GP. You talked me into it. I'm all in.
But you've got to watch, right? So this is why I'm more
watch,
bullish.
as Duzio says.
I'm more bullish Qs, but I'm concerned about Apple. So that's the one thing that, like, I can't give it. It's harder and harder these days to give you a thought process that is not bifurcated amongst all of these different kind of views, because it's a congestion zone. It's a macro nightmare. It is, look, man, there's protests going on in China right now, literally calling for the end of Xi, I don't even know how to pronounce it, of his dominance. And when have we ever seen that, right? Like, people actually in China protesting, and it's broadcasting to us. Maybe it's been happening, but we may not know about it because they got under wraps. So there's a lot of stuff that's concerning about this environment, that it can go either way. But right now, technically, the Qs look better for that Jackson Hole test.
The Jackson Hole test.
That to me is a very clutch area that comes up, and we may or may not get there. Where we actually rejected the September CPI surprise area, and that's what we've been rejecting for like the last 2 weeks now. So, but it's also a 3-week tight pattern underneath a resistance zone, which is usually, in a bull market, of course, is usually a great setup for higher, right?
You know what, GP, when I see you, I'm going to kick you right square in the butt, because now you've got me looking at this 200, at the way the Dow had the 3-week tight and bounced right off of it and went higher. And now we have all these other suckers doing that same thing. God, let's talk about something we both hate: energy.
Yeah. Okay. So I know I've been talking about the energy top for a while.
No. Actually, we'll come back to energy. We're going to jump to healthcare, because I've hated on healthcare for so long, and major tech farm, or big tech pharma, or big pharma, I should say. I have hated on them for months, if not years. It seems like forever. But holy cow, when you look at the XLV, like, I gotta say when I'm wrong. I gotta give props and respect, right? XLV, which isn't just drug names, but strength. I mean, didn't even get down to that 200, bounced off the 120 there. And then what's my ticker for just pharma? Hang on, I'll tell you.
No, so while you're still here, before you go to that,
right,
this is also a classical kind of double bottom, right? So
yeah,
a lot of people confuse double bottoms with a double bottom happening like 3 seconds later, right? Oh, it's a double bottom. And I'm like, no, double bottoms are setups to that break out, that hold an area, then break out for months,
This is PPH. This is your large tech pharma. This is your Bristol Myers. This is your Johnson and Johnson.
Look at Gilead. Look at what Gilead.
Yeah. This is Gilead. Yeah, I know Gilead, also known as the Widowmaker. Look at that.
What is that? 13 years sideways.
Look at that. I mean, in fairness, it is up to the resistance point, but that sucker's like it's gone. Like that, it's gone. It's gone.
Yeah, and this would have been fortune makers if you were playing options, because no one thought it was going to ever break out, and then it actually broke out, right? So,
you look at like a Pfizer, right? Like strength, and you guys have followed me long enough. You know that I have hated every single one of these stocks for the longest time. I mean, just throw one out.
Look at Amgen.
Just
sideways for years. Boom.
Just all of them.
And if Celgene was still around, they would also be
missing somebody. mRNA. Yeah. Also, mRNA. Like, ready to go. Ready to go.
My focus is still, I think tech looks one of like the better setups in general. I don't know about XBI so much. I was more positive, and now it just looks like a mess.
I know our good friend Monkey Banana Genius likes this one. Looks pretty good. Abcellera.
Yeah, and this is all prove it, right? These days. Yep. So this looks great.
I did have to throw the volume in there, right? Very putrid volume, and you can't have a breakout on volume like that. If you do, it's probably fake. So it looks great. If it's able to break out, $19, here we come.
Yeah, and so like in the world of tech and e-commerce and stuff like that, one of the better ones I like is Shop, right? That, like, if you're looking at Shop, since the volume capitulation blowout, it's basing, right? And that to me is, and they got some positive Black Friday news. I don't know if that's going to help them do anything, because they could still be in accumulation mode, and could be accumulation mode for years. I have no clue, right? You got to wait for the breakout, but this looks like it's on the verge of testing the top of the channel, which is the 42 area, right? And if it takes out 42, then the bigger test will be the 49 to 51 area, I think. What's that?
Shop split not too long ago, right?
Yeah, and that's the capitulation volume daily high. That was from beginning of May, which is the high was 48.80. So like that's the one that that's the area that I'd be looking for to take out if it's actually like this is actually going to break out at this base, right? But we know bases. Look, FSLR is a good concept of bases.
Oh my God.
It based for 12 years, 13 years.
My God.
Broke out and then broke back down into the base, and then has never looked back. And people are still trying to short this, and you're like,
well, dummy me was saying you probably want to short it through here, and if you'd been in it for a minute, you might have been good. But then that sucker just went bing.
Yeah, it's slowing down. Momentum doesn't mean it's going to be death, right? This is a 14-year base breakout, or a 12-year base breakout. 2008 highs is what we're in the area right now, and you even got a disgusting breakdown right back into the base for shits and giggles, right? Just to wipe everyone out.
Yeah.
And now it's pushing higher. You can try to short at key moments, but I don't think it's a long-term short personally. This is one of the better solar stocks in general. They don't have a lot of debt. You will see moments where it does start to pull in, and it should, because it's literally doubled in like 3 months or 4 months, more than doubled in 3 or 4 months. So it should rest. It should find some time, but that doesn't necessarily mean it's going back to 110, 120. It could. This market's crazy, but that it just you're shorting the trend on a larger time frame, and that's the that's the part that's mind-boggling to me, right? Whereas like if you look at XLE, since we want to talk about energy,
yeah,
right?
let's talk about that stinky shit.
It's not breaking out.
It
hasn't broken out. So shorting this is a better thought process, because it's just come back into previous highs, and now two separate attempts months apart are showing tons of resistance. If we break through this resistance, game's on, right? Like it's time to get long. Because I think it takes out the 102 level and it goes higher, but it's got to break through this. This is what you'd typically call a double top, because it made a high in June, came back to that high 4 months later, and is struggling. So if it breaks out of the double top here, then yes, it's going higher. But if it doesn't, it's going lower. And the strength over the last few weeks on every drop suggests that we are going to go higher, right? So as it continues to diverge from oil, which honestly just doesn't.
There's crude.
Yeah, it just doesn't make any sense, but it's what it is, right? No reason to fight it anymore. I was short. On that drop, I think it was on Monday, I got out because I'm like, this has just been made my, whatever, and was like, I'll reassess this when things do start to break down. And if it does break down from here, it's going to be disgusting, right?
Yeah.
It's not going to be pretty.
Like we were talking about in the indices, right? That you wait for the breakout. Like this is basically an inverted cup and handle, right? Like this is an upside down cup and handle to some degree.
Yeah, it looks like all the tech charts in January.
That doesn't mean it's going to break there, but it likely will. And you don't have to be the hero to take the trade right here. You can wait for it to do it, and once it does it, I think it's probably a pretty good bet of where it'll end up.
Could be. But like oil in general is just a miserable trader, right? Like the same thing that went negative. So it can do all kinds of weird things for a really long time.
As we were looking back at First Solar, I was thinking of, I couldn't believe it was $171. I hadn't looked at the chart in a couple of days. And I can't get over the fact of I can remember when I first got to Atlanta, and I was nothing in my house except me and my phone, and I was just looking at charts. First Solar on that day that I was saying this looks like it's going to squeeze and break out was $67.90. $102 later.
Yep.
It's just crazy.
Yeah. And I also hate it, right? Because I had January 125 leaps that I bought last January of this year. I mean, coming up in 2023 that I bought last year, 125 leaps, and I did well on them and I sold them for a decent amount, but I still had some runners. And then I got stopped out of the runners because it obviously went back to test the 66. And I was just like, okay, this is going to fail the base breakout, right? So I was just like, I'm not getting involved. And then it just took off. And those, I think, were like $4 or $5, and they would be currently, I think, $55 now. So it frustrates me as well, but it's what it is, man.
I'm not frustrated. I mean, I like charts that I like to end up doing well, whether I'm in them or not. Like I just like to see what I think is going to happen, right? Like it validates the time you spend on doing what you do. So while I wasn't in the trade, like I like seeing it do that.
Absolutely. I loved it, but the fact that I had to go from 123 all the way back to 61 was it's a reminder that their goal, and I don't know who they are, but their goal is to make sure the least amount of people participate.
Yeah. We got a question from Dubs in our YouTube chat, GP. And Dubs, we're just going to preface this with, this is not financial advice. This is our interpretation of the chart. Exxon Mobil, is it a good short? I would say, based off of what we were saying on XLE and crude, I mean, to me, I pay attention to the sort of rounding top action that we have right there. I can throw GP's volume up there. You've got declining volume, right? So that's going that way. And more importantly, which I always try to pay attention to, is we had this huge negative divergence happening. Yes. So while the price is getting higher, the RSI is getting weaker, which you basically have two negative divergences, right? You have lower volume, you have lower RSI. You're not making highs. You're basically bumping into them and failing, right? So it's makes that rounding top pattern. So I don't like it long here. So, if I wanted to short something, I'd probably find maybe something else other than Exxon. But to me, the chart appears to indicate it could very well travel down.
Yeah, and what you also have to see, right? Like, so to answer your question, is ExxonMobil a good short? I would say short term, no, right? It hasn't broken anything.
That's right.
And it's sitting above its all from its highs in June. And yes, there's potentially a rounding top. Yes, there's potentially negative divergence. There's all of that. But would I go short right now? No, you got to see a break, right? Like it's just what it is.
It's just like we were explaining the breakout on the indices or the double bottom or inverse cup and handle on the crude chart. So it's showing signs that you could absolutely be right. This is the way I always try to look at it. Would I rather gamble or would I rather have more of a sure thing? And more of a sure thing, you're not going to make as much as the gamble, but you're not risking as much as the gamble either, right? So in this game, I think if 2022 has shown us anything, is we need to not lose a lot of money. We need to try to keep our powder and deploy it in the best setups.
Yeah, and so the short setup would be with a break and close of that 105 area, right? Which is the June highs, that's what I'd be looking at. And if you're like, hey, I want to take a shot at my thesis and I want to take this short, the way I would handle that is using put calendars, right? So sell short-term puts, not financial advice, but the way I would handle it. I'm not doing any of these trades, so you're on your own if you do. But the way I would handle that is using put calendars, right? So I would say in the next couple of weeks or month or two or whatever it is, I don't know if it's going to actually fall. So I would sell puts for front month and buy longer term puts, right? So like maybe January puts to buy June puts, right? For the breakout for it to happen. So you're not risking as much. But
if we look further out, right, like this is the monthly chart as we're approaching the end of November, it's still above the breakout, right? Like it can show some weakness after a breakout. What you want to see though is it retest it and then go. So you're really not even into that retest of that 105 area that GP was talking about.
Yep.
That doesn't mean it can't come into 105 or go a little lower and then shoot higher. But I would at least want to see it come down into this zone before I would entertain it on Exxon. When we look at this, the XLE, these two black lines was the little zone that we kind of wanted it to peter out in. It's still above it too. As much as we don't like energy, that doesn't mean that it all of a sudden go in as an active short either. It's got all the same signs. You've got the negative divergence on volume and RSI. You've got the rounding top, very emblematic of what we just saw in Exxon. So again, just trying to be smarter about it, as opposed to like, I'm going to put everything on $70 puts tomorrow on the XLE.
And look, I was short XLE. It was frustrating, and I got the gap down, but then I saw no follow through. And because I saw no follow through, I got out because my thesis didn't work, right? Like the thesis is that it should break down. And instead of breaking pivots, it's holding right above pivots. That's not sign of weakness, that's sign of strength, right? So and it ultimately may have just been a shakeout for me, but I'm happy to find out when it does break down, right? So like I think that was that Monday gap down, it tagged 87 and didn't even break that 86 area where it broke out from. So I'm like, and then the buyer stepped in, and then the news came out that the Saudi Arabia production cut was false and all that. So the strength just shows up when, and then the news comes, is what you usually find. So I was proponent of shorts, but it's showing otherwise. So until it actually breaks down, it's hard for me to recommend that short again anymore.
One thing I want to say, Dubs, just in regard to the negative divergence. I repeat this nonstop. I haven't said it today, but overbought can stay overbought and oversold can stay oversold. At some point, just like a parabola, right? It's going to break down. We don't know when negative divergence is going to take hold exactly. It's just something to watch, to pay attention to seeing something play out. It doesn't mean it's inevitable, right? Just like being overbought when somebody says, you gotta, it's going lower from here, it's overbought. Well, it can stay overbought for some time. I mean, look at the XLE just being overbought basically the entire first half of 2022, right? And what did it do? It kept going up until June, where it finally fell down eventually, but that can take months. It could take weeks. So just because we see negative divergence, again, it's, my kids like Blue's Clues, right? Like this is one of Blue's Clues to be able to figure out what's going on. It doesn't necessarily tell the whole story.
But you know what is telling the story?
Me being bearish.
Yeah, just I think us are telling the story. I think what I have my own service, and what I was telling people in my service is that tech continues to break pivot lows, right? Whereas XLE, dollar, USD, JPY, all are weak, but aren't breaking pivot lows, right? So True. What's that telling me? It's like, so if you bring up the DXY, right?
Oh, the dollar index.
The dollar index. This was topping out. This was a similar kind of conversation. And then it broke down, right? We're expecting a breakdown, but it has not taken out that early November low. I think it's November, or is it early October low? Right? No, early November low, right? And the pivot from the June 15th high, right? Like that area, it hasn't taken out that. So what you want to see here is a breakdown, but it hasn't broken down. It hasn't even broken pivot lows. Is it showing signs? Yeah, but this is what concerns me, is that like if we want to see the rest of the market, and we've been tied to the dollar all year, right? Dollar goes up, market gets crushed. And we've been seeing continuous weakness in the dollar, but we haven't seen the same inverse relationship in the Qs. Yes, the Qs are 30 points off their lows, but that's only 15%, right? Whereas the dollar has has come down what, 10%, which is a big move for currencies,
Yes.
right? And you'll see, and I think the dollar's weakness is not because the dollar is weak, but because you're seeing a lot of other currencies starting to raise rates. So they're strengthening their own currency. So that's causing the dollar weakness. But the dollar weakness isn't breaking down here, right? So to me, unless we break this pivot low, what was that August low, right? It's 104.63-ish. That's when I think there'll be more. But right now we're still holding above all these pivots. So that's the concern for me on the markets, because
this could be a retest.
Unlike tech, which gets to the prior low and just destroys it all year, right? Even middle of October, when whatever was Q's just absolutely destroyed that low based on news that we already knew was coming. Right? What was that? The CPI, right? In October, we knew inflation was high. It wasn't like it was like crazy high again. It's not like it spiked 10% more. It was just another high number, and yet we still had this reflexive move down and then immediately bought up. But that's what I'm talking about here, is like we were making new lows even until middle of October. So whereas dollar is not. So that's a concern for me. And once those things start breaking down, if those things start breaking down, then I'd be a little bit more confident about where this market is going. And dude, we could, after the 7% day off the CPI in November, we've been sideways for 2 weeks now. 2 weeks.
3 weeks tight.
We could be sideways for another 10. Who knows?
Who knows?
This could just be the fair value of where people find value in the stocks that they own. They don't find it higher, they don't find it lower.
Hey, GP, what, I know you're always watching Netflix. What else is on your mind? What else you paying attention to other than the Dixie and tech? And
so the other ones that are giving me a lot more hope versus Dixie is if you're looking at LQD. Right? So this broke through that pivot low. So that is a good sign, right? That to me is a really good
shit's
sign.
Ready to rock.
Yeah. So this broke through I think the COVID lows too, right? If you go back further.
Yep, there it is right here.
Yeah. So 106.94 is a line that I have on that chart from a while back that has been pretty strong resistance back in 08, 09 area, and
I like this chart a lot right here, GP.
Yeah, so this is an indication to me that we're ready to rock, right? I would like to see more volume here, but this is a good sign, right?
It's had volume for weeks, and this was a short holiday week, so yeah. I mean, we can't pin low volume down just because it was a holiday week. I don't think that's the canary in the coal mine. What I do like out of this is, you can see one of these numbers right here, right?
Yeah, and the same kind of goes for the HYG, right? And your junk bonds and things like that. If you're watching those things. Right, these things are taking out pivots, so a pivot moving higher. And if you go to J and K is the junk bonds, I believe.
I really like that LQD.
Yep. All right, so this is also something to watch. And then obviously bonds in general, TLT has been pretty strong over the last few weeks, and taking out the pivot low from late September. Right, it hit that resistance.
My channel says it's got some work to do.
Oh, it's got a ton of work to do, right? But the weakness is starting to dissipate in TLT, if you see the lows from 927, it broke down there. The reversed higher for a few days, came back, broke down, and once it broke that level, it was just a straight death. And went for bonds, this is a big move. It went from 101 or 102 or whatever it was to 92, right? That's a 10-12% move in bonds after already getting massacred. And we came back and we retook those levels this week, which is a good sign as well.
Ari has joined the chat, and thoughts on TAN and EMPH.
EMPH looks great.
Yeah, we like First Solar, which is a part of the TAN. I mean, this looks like a constructive setup to me on the monthly. We'll see how we close here, but that would be flagging right here. That's what that would be. That would be a flag.
Yes. Flagging, wedging, whatever you want to call it. ENPH also looks really good, but there are a couple of warning shot volume spikes that leave me concerned on a daily basis. Right? Those are some pretty high volume kind of moves in a sideways pattern.
Yeah.
So that to me is a bit concerning, but if you're looking at a weekly, it looks great on a weekly, right?
Well, I think this comes back to what we were talking about earlier too, right? Like you can wait on this to break to the upside, right? Like you can wait on that to break the upside. And as long as it was trading in this range, you could feel okay, because at some point it has to resolve out of this, either that way, right, or it's going to fail and go that way, right?
Yeah.
So
buy the breakout and keep that breakout as your stop, because there's been a lot of breakout failures, right? IWM is the one that comes to mind the best. In the last
the homie Bihanu's with us again. Bihanu, we spoke on Goldman. GP did for just a minute when we started. I don't think it's the worst looking chart out there. It is running a little hot for me. But you look at that weekly, you look at that monthly. I mean, it looks pretty solid.
And the great part about the monthly is it's a base breakout retest.
Yep, that's right.
Right. So it broke out of the 12-14 year base from the financial crisis, went sideways for a few months, came back and retested that area and went sideways for like 8 months, and is now pushing higher. So if you're thinking about base breakout moves, it's not extended. It's just going back to which, right. So
so basically, you look at it like this, right? You have this line right here is the resistance that it kept bumping into, right? And it failed right here, went down. And then you broke out right here. And on that breakout, you all of a sudden have this now as your support. And that's what it came into and retested. So you had the breakout, you came down and retested it, and now you're going higher. So to me, it looks like a really good.
Now compare this to First Solar, right? Because that looks exactly like First Solar to me. What if First Solar, when it came back to test the base, what was it, 6 months sideways?
Yeah.
After it hit 123 and came back to 61, and it just sat there for 6 months and then took off.
Yep.
And you can call this extended as well, but it doesn't care that you call it extended because it's continuing to extend at this point.
I mean, Bihanu, I don't know that I would call it due for a correction. I mean, I think it was just a retest. So this was the extension right here. This is not a correction. This is retesting that extension. I mean, this is parabolic, right? From November 2020 all the way to October 2021. this was nearly a straight line up. I mean, we're talking, if my pointer will work here. Hello, is this thing on? There we go. I mean, we're talking about 120%, right? From the beginning of the breakout to the top. So that's way overextended. What I'm seeing is this, right? Is you come down, that's 30% off of what 120% move was. So that's not a crazy breakdown. That's not a correction. That's a retest. And now you're from the bottom there to where it is now, 37%, right? So I hear you. It might could cool down some and not go so fast. But I wouldn't say this is due for a correction.
So
it could go to zero. I don't know, but
if you're talking about like zero DTE, then yeah, possibly, right? But trying to look at bigger picture here, right?
Ultimately. Yeah. When I'm looking at weeklies and monthlies, I'm not looking at day trades.
Yeah. Because that seems to be a lot of confusion. But if you're looking at Goldman on a more like wave formation basis as well, it was a 50% retrace of the move from 2020 lows to 2021 highs, right? It came back and retested the 50% move, and then now it's breaking higher. Typically, so you could assume that the first wave was the move from 2020 lows to 2021 highs, and it just completed its wave 2 correction. And wave 3 moves are typically relentless, right? Like, so wave 3 moves are very shallow pullbacks. They don't give you an opportunity to get in. They don't give you a desirable buy-in point. To be fair, if you think about wave 3s, think about like I don't know, like 2020, right? It never really gave you a great desirable buy point. It was just straight moves higher. So that's what Goldman looks like to me. If you're looking at like if you're into the wave stuff, typically wave 2 corrections are 38 to 50%.
So looking at a similar chart, if you were looking to buy Goldman, you should have been buying it sub 300.
Yep.
And similarly to BlackRock, if you were trying to buy BlackRock, it should have been a number. It should have been a number starting with 5. Anywhere in that 500 would have been the area to pick off. BlackRock doesn't look as forceful at the moment as Goldman has, but I would expect very similar outcomes to both of these names. I mean, look at it, just smash through that. You're basically sitting here ready to go. Basically all 2 weeks ago did was cool it down, right? It just took a chill. It's above all the EMAs, and it's ready to go. You could look at that and say this is due a correction, right? Especially if you're looking at the 1 hour, 4 hour, like, I mean, you look at it in the fractals and it's a big move. But when you're looking at weeklies and monthlies, like it's doing kind of what you'd expect it to do. Now, that doesn't mean that BlackRock couldn't come back in under 700. I'm not saying that at all. But it's showing you it does have a change of character. Last one he wanted us to look at was Tesla. I know one of your favorites, GP. You're still in Tesla from way back. I've been in and out of Tesla. To me, I mean, it's in this zone until it's not.
It's still not a head and shoulders breakdown. I know people still want to keep calling it that.
Who's calling it that?
Everyone is.
No, it's not that for sure.
Yeah.
But it's in this, right? Like it's channeling. Nothing's broken. That's holding the breakout that it had from November 2020. So until that gets taken down, which it could come in well under that. It
looks similar if you go back to 2016. This looks exactly like the 2014 to 2019 consolidation pattern, just compressed, right? So 2016, it had that similar death stroke straight move from like I think 15 bucks, 16 bucks straight to $8. So a 50% correction in like 2 months, which is what we just had, 50% in 2 months, because of Elon's antics as per usual. And that was right under the 200 EMA, right? The weekly 200 EMA, broke right through without even flinching, put in a doji candle, and then reversed higher. And in that move, when that happened in February 2016, it went from a low of 940 to a high of 1727. So nearly 100% move in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So a lot of people love to bet against Elon, and he gives you all the reasons in the world to do it. They have a big semi-event this week on the 1st. If they are accomplishing what he's already tweeted about this weekend, which is 500-mile range with 81,000 pounds, that's a fairly big game changer. Production is always an issue. It's good to separate Tesla from Elon. Quite often, if you want to be an investor. But if you're an investor in Tesla, Elon's antics come with the conversation always. But to me, it's how much you want to buy for the bigger picture. I don't really trade a lot of Tesla anymore. I just let it do its work for me. And I'm a believer that it's got long-term viability and visibility and growth and all that other stuff. And
well, I mean, it's pretty evident that coming into contact with the 200 weekly, it can go below it too, as we saw in 2019, right? But repeatedly, that has proven to be a great buy.
Yeah, and if you're buying for a week, no, but if you're buying long term, yes, right. Absolutely.
Right.
So I love the comments. It's like, oh, we need the Elon bubble to burst, and I think Apple's more of a bubble than Tesla, personally.
We haven't even talked about Apple today. How about that?
Yeah, Apple's trading at like 28 times PE. Like, it's just ridiculous with zero growth, but it refuses to break down. So this is the chart that concerns me, is Apple here.
Below the key EMAs, failed to push the EMAs above the 50. The 21 is starting to serve as resistance.
This looks like Tesla before it broke down.
You've got the RSIs also pointing down. Just doesn't look like a great chart right now.
Nope, it's not breaking down, but it may, and it looks very similar, because this is the only domino that hasn't fallen in this market, right? If we're being real, in the tech market, Apple's held pretty strong. So if we need all of our leaders to die miserable deaths, then this should be a concern for a lot of people, because Apple is a big weight in the SPY, in the Qs, in literally every portfolio on the planet. So it looks very similar to Tesla before Tesla took a 50% haircut.
And with those positive affirmations,
I don't think Apple takes a 50% haircut.
We're back to bearish bags.
I told you, it's so many different conflicting signals. It's hard to say one way or the other here. There's things that look good, like the LQD, which I think is a better tell. The weakness in the dollar, the weakness in the strength in bonds. I think this is all stuff that looks good, but there's a lot of stuff that also looks kind of suspect.
So like we said, in the words of Duzio, gotta watch. You
Exactly.
gotta watch.
Right. And as I was saying last week, Netflix refuses to fill the gap, right? That's a big concern for me because something like Netflix should fill the gap. This is a 3-week type pattern, to be honest. So maybe it fills the gap this week, or maybe it just gets fully rejected, but it's 3 weeks tight after being like 7 weeks of semi-tight.
Give this man his 340 already.
Oh, you know what, Bags? Like it's I own shares from much lower, so I'm not really worried too much about short-term stuff, but like in an indication of what I think, and this bottomed in May before anything else bottomed.
It did.
So for it to not fill the gap after bottoming before everything else is kind of a concern, right? Like, what do you mean it can't fill the gap? It was literally $30 away. I'm like, what is going on? But you look at the flow. As soon as it got to that like 311 level, the flow started getting really bearish.
Well,
so Shopify is the one I'm watching this week for me.
As Boy George and Culture Club saying, do you really want to hurt me?
No.
Netflix, you're hurting GP. Do you really want to hurt him?
I think so. It's a miserable trader.
All right, GP. We've been on for an hour. I appreciate you being here with me. Nick, hey, buddy, feel better. We hope to hear you again next week. And we teased it at the end of last week's show. We're actually trying to get together and do an in-person live TA report. We'll keep you guys tuned in on that when and where that is to happen. But we're all kind of excited. We all might be in the same room, and we'll put all the charts up on the big monitor and share a microphone. It sounds awesome.
Yeah, sounds very COVID friendly.
All right, GP.